Starting soon, the Monday Market Highlights podcast will be exclusively available on Milford's new podcast channel called On Track with Milford. Search On Track with Milford on your podcast app and tap subscribe so you don't miss out on any episodes.
You're listening to the Monday Market Highlights brought to you by Milford.
Good morning. It's Monday, the 14th of August, and I'm Will from Milford. US CPI was the key macro focus for the market last week. Headline and core both printed in line with market expectations, with month-on-month coming in at 0.2%, while annual headline inflation was 3.2% versus core at 4.7%. Large energy price rises from last year keep rolling off, reducing the headline number, while strong services inflation keeps the core measure elevated. Overall, it was a relatively quiet week for macro, with focus on the Australian company reporting season, which kicked off last week with a raft of big results. Building product manufacturer James Hardie produced a cracking result on Tuesday, sending the stock soaring up 15%. The result was driven mainly by the US business posting very strong margins, helped by falling freight costs, which is particularly impressive considering the slowing consumption environment. Guidance was also improved for new housing construction in the US, however repair and remodel was slightly reduced. CPI's result was generally in line with the market, with the stock finishing up 2.5% on results day. NPAT and NIM were as expected, with much of the focus on the guidance and broader macro comments. Arrears have started to move higher, which is to be expected considering the move in interest rates and the cost of living pressures, and are mainly focused in personal loans. CBA included an interesting chart in their release, showing the distributions of loans versus savings and changes in savings and spending versus last year. The 65 plus cohort continue to have very low balances, with strong increases in savings and spending, which is in contrast to under 34s, who are seeing reductions in savings and spending accelerate. This lines up with the view that Australia is currently a two-speed economy, where those with debt are struggling with rate rises causing a pullback in spending, but those without are still enjoying life with the increased interest on savings accounts and term deposits. Insurers Suncorp and QBE both posted weaker results, falling 1.5% and 1.2% respectively when they reported. Suncorp reported a softer insurance margin, combined with a poor dividend payout, weaker bank results and outlook. QBE had a messy result due to some accounting changes, where NPAT was a small miss due to tax changes. Outlook, however, was more positive, with the exit margin a slight beat. There's also plenty of action in the deal space last week, with two new binding deals. Estia Health finalised their binding deal with private equity player Bain Capital at $3.20 per share. A vote with shareholders is expected in late November, followed by settlement in December. Meanwhile, funeral business Invocare finalised their takeover from TPG Private Equity after some back and forth over price. The two parties settled on $12.70 per share, a reduction of the previous bid of $13, which is expected to be finalised in November this year. This week, reporting season continues at pace in Australia, with a large portion of the index reporting. Over the week, we should have JB Hi-Fi, CSL, Treasury Wines, Dan Murphy's owner Endeavour Group, Transurban and Telstra among others. Economic releases to watch will include the second quarter wages for Australia, which are expected to see a rise of 3.7% along with the monthly employment numbers. Offshore, the FOMC July minutes will be released on Thursday, and the RBNZ monetary policy decision on Wednesday, where the bank is expected to keep rates on hold. Thanks for listening. Have a great week.
Don't forget, this podcast is moving to Milford's new podcast channel. Search On Track with Milford on your podcast app and tap subscribe so you don't miss out.